Guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, Brent Rasmussen, owner of Mortgage Specialists. So today we're going to talk about gift funds, and this is a very common question among first-time homebuyers and sometimes parents and grandparents telling their particular grandkids or kids, hey, I'll be able to help give you a gift to use that to purchase a home. And a lot of clients call and ask us, or we advise them, hey, if you don't have down payment money, maybe you can receive a gift. So first of all, what is a gift? What is the definition of a gift? And a gift is money that's passed on, used to be as a family member, doesn't have to be, can be from anyone, that states, here is some money, I'm not asking for it to be repaid back. And with that gift, it's a non-repayable loan, basically, in regards to that gift, and that you can use that for a down payment or cover costs in that real estate transaction to use as you see fit. I would share with you that many first-time homebuyers and many first-time homebuyer transactions rely on a gift because when maybe your parents or their parents bought a house, they also received some kind of an assistance from their family members as well. So gifts are very, very important. And really, why does the word gift come to mind? It's created by the IRS and estate tax principles, basically. They don't want the average person that has millions of dollars, not the average person, but the person that has millions of dollars, just to give away their money and not become taxed if they were to pass away. So a gift, really, the definition comes more from the IRS tax codes, not really in the mortgage arena whatsoever. And while we understand what those codes are and what they can do for you and for the mortgage transaction, we always want to defer to whoever's asking about a gift to talk to their CPA to make sure it's okay for them to do and their parents to do, and they understand the rules behind it. So the common sources of gift, where does gifting money come from? Generally speaking, parents or grandparents might have money invested and they want to pass it on now before they possibly pass away so that they could use it. Or a family member might own a house already and it's paid off free and clear. We can do a gift of equity, and the buyer or the home, generally as a family member, would be able to use that equity as a down payment or cover the costs with them. So gifting generally is monies exchanged, whether it goes through each individual bank account, whether the gift goes to the title company, whether the gift shows up on the final closing statement. There's different ways that we can gift money. And it's always great to talk to the mortgage professional about how is the best way to handle it, because I can share with you the negatives of gift. And there's not a lot of negatives, but there are negatives, is the amount of paperwork sometimes that family members can be very frustrated with the amount of paperwork that's needed. Again, we don't feel that it's that excruciatingly painful. And again, we as mortgage companies don't want to get into your business, but based on anti-money laundering laws, we have to validate where that money truly came from. And we don't want it to show up as a loan on your credit card, or you went and borrowed money from a bank. If you did do that, we have to count those debt payments against your debt to income ratio on the loan. But if it's a gift, there's no payment. So what we need in regards to documenting a gift is generally the individual that's gifting the money. We need a copy of their bank statement. They need to sign a letter stating it's truly a gift, not a loan. And we got to verify that funds transferred from the giftor to the giftee. And once we get that paperwork, we can use that for the mortgage loan to document, here's $5,000, $10,000, $20,000 to use as they see fit towards down payment, closing costs, escrow monies, things like that. So it's a very easy, available way if your family is willing to assist and help you purchase a home. And a lot of times we've seen families that do have extra money that they can give their child instead of maybe a wedding gift, or instead of paying for college, or on top of those things, just to help get you as a first-time home buyer out the door and starting a new property. We see gifting happen a lot when people already have a home to buy. They want to be able to buy something in the meantime and sell their house later that a family member can use and give them a gift. And if they so see fit to pay the family member off later, then that works as well. So again, there are restrictions per the IRS, and every year the IRS has restrictions on how much money one person can gift another one. For example, in 2023, the gift amount is $17,000. So let's say I am a single individual and I have a mother and a father. My mother can give me $17,000. My father can give me $17,000. That's $34,000 now I can use. So another scenario occurs. Let's say that now I'm married and my wife is around and on the loan as well. My mom can give me $17,000. My mother can give my wife $17,000. And my dad can give me $17,000 and can give my wife $17,000. So now we're looking at using $68,000. And this is generally the main question gifters always have is, isn't there some kind of a limitation of what I can and I cannot do? And that's structured again by IRS code. And we'd have you Google gifting requirements or gifting limits so that you understand each year what the maximum amount is. Generally, each year it goes up a little bit. And it's basically put in place instead of giving away your money to avoid a state tax is really why the gifting law by the IRS has been put in place. So what's the negative of all this? If your family member has money and they want to gift you money and you have the ability to put the paperwork together to show us, the only negative that we run into often is, besides the frustration of the paperwork, is it can put a potential strain on your relationship. At the time that someone gives you money, usually everybody's in good standing, very happy, excited to move forward. What were to happen at some point in time if 2 or 3 years go by and now the person that gifted the money wants the money back, wants you to sell the house, wants repayment on this gift, and they change their mind? Those things do happen. And anytime I would tell you involving family financial relationships, they can cause a strain. Do they always? No. I've heard it all the time that my family is great. We get along very well. But anytime you involve family and finances, it can be a mess at certain times. Not saying that it will or it won't, but it's something to think about and contemplate before moving forward and going into receiving a gift from a family member. Nowadays, gifting is allowed, not necessarily even from a family member. On certain loans, you can receive a gift from anyone. So it makes it even more complicated there if you're receiving a gift from your friend and that friend misunderstood and now wants repayment back, and you have to sell your house to pay that person's gift money back. So I hope you learned a little bit about gifting. Gifting through the years changes. The underwriting guidelines move and modify a little bit, but in principle, they all stay the same. Again, we would always encourage you to seek the best legal advice you can from your CPA and your accountant on what is allowed for you and your family to gift each other. But gifting is a great source for first-time home buyers and any buyers to use money as their down payment, closing costs, and prepaids. Again, I'm Brent Rasmussen, owner of Mortgage Specialist, here every week to provide you with this Mortgage Matters in Minutes. And we're always a phone call away at 402-991-5153, or you can read any of our blogs or stories and at our website at mtg-specialists.com. I hope you have a great rest of your day, and we'll see you all here next week. Mortgage Specialists. Driven, trusted, reliable.